Hey guys, Jason Schnitzer here with RE/MAX Tiffany Real Estate, and what I've got for you here is how's the real estate market for week 48 of this 2022 year. As always, I bring you the latest and the greatest on what's happened in the last week. This week it's the last 2 weeks because we took Thanksgiving off. We'll start off with statistics so that we can help maybe track some trends here. 3298 homes for sale in Orange County. The biggest change that we've had is only 140 new homes have come on the market and 214 pending sales. Now, again, going back and comparing to the last couple of years, this information is significantly less than those last 2 years. And of course, interest rates and uncertainty with regards to our economy, I think, is the main driver behind that. And also, we haven't seen prices come down equal to the amount that interest rates have gone up. So affordability is really what's being hurt here from the buyer's perspective. And whenever you have that going on, we have an imbalance in supply and demand where we have a lower demand, start seeing an increase in supply, and we could potentially see the market soften even more. And a lot of that is going to be contingent on what the Fed is going to be saying here in the last month of 2022. What I'm looking at is, are they going to continue raising rates and stay aggressive with fighting inflation, or are they going to see what I'm seeing with the numbers and the data and potentially back off their aggressiveness, because those are going to have two opposite effects on our market. In other interest rate news, 2023 loan limits have just come out and they have increased again. What I mean by that is the amount that you can borrow in order to stay into what's considered a conforming loan limit has gone from 625 all the way up to 726,200. And high balance conforming limit, in other words, the maximum amount that you can borrow before you start getting into jumbo loan category, has gone from 970,800 all the way up to $1,089,300. So what does that mean for the buyer? Well, they can borrow more money and then stay within conforming loan limits instead of having to get to a jumbo program, which are more difficult to qualify for. So what that could potentially open up from the selling side of things are, again, an increase to the buyer pool with their ability to borrow more money and then potentially add to the demand factor. It all goes back to good old supply and demand economics 101. So I am not going to be making any predictions here. A lot of what I'm hanging my hat on is what the Fed is going to say in their December meetings. And of course, I'll be bringing that news to you right here in this quick little segment to keep you guys most updated on what is oftentimes your most expensive assets. I like to keep you guys armed with information, so when you go to make decisions, you're empowered by them. And of course, I'm here to help. If you would like us to give you an evaluation on your real estate portfolio, have plans for 2023 with regards to real estate moves, whether that be to expand your portfolio with investment properties or to potentially move up into a bigger house, move down into a smaller house, or even move out of state, we offer free real estate consulting. So reach out to us by any means, phone call, email, right here on social media, and we'd be happy to help. So thanks for watching, you guys, and I'll catch you next week. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason, I believe, is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and we'll get you those answers.